So everyone is well installed, and welcome to the first panel discussion of today's conference, which will slightly turn the subject from the perspective of the company into regulation and legislation, and also lending and investment practices. So we have a quite wide title: Green, Clean and Digital, and about 1 hour to explore the content beneath these much used almost buzzwords. And we will look at the legislation coming from the European Union, the EFTA states' contribution to sustainability and digitalization, to understand more in depth how we can approach sustainability and digitalization in practice. And for this part of the conference, whereas later you will have more on the details of the EEA setup, the EEA agreement, the key feature for this part is that it binds together the EU EFTA states, the EEA EFTA states with the EU member states, and it extends the internal market for financial services to Norway, Iceland and Liechtenstein. So what that means is that there is a homogeneous legislative and regulatory framework, and that allows capital to flow. It allows share of technology, and it serves as an enabler and facilitator of the cooperation between Norway, Iceland, Liechtenstein, and the EU member states. So to help us understand more in depth, we have an excellent panel and with different approaches. From the European Commission, DG FISMA, Mr. Marcel Haag, who heads horizontal policies, meaning that you're in an excellent position both to share knowledge on the Capital Market Union, Sustainability Finance Package, and the Digital Finance Package. Then from the Icelandic Central Bank, Ms. Unnur Gunnarsdóttir, who heads the supervisor, which is located within the central bank. She has very long experience with the EEA agreement and financial services. And then from Liechtenstein, we have the private banker and investor perspective, Mr. Olivier de Perregaux, CEO of LGT Bank, owned by the Princely House of Liechtenstein, and a global lender and asset manager, so representing the target institution of much of the new legislation. And last but not least, Mr. Idar Kreutzer, CEO of Finance Norway, representing about 240 companies, 50,000 employees, covering both banking, insurance, and in securities. So in an excellent position to shed light on how Norwegian institutions work and industry perspective on the new legislation. So to start out the panel, each and one of the panelists will give an introductory remark, and then followed by a discussion, which I very much look forward to. So to start, we'll start with the Commission, always first, to share light on the legislative packages. Please.
Okay, thank you, Inger, and thank you for having me this afternoon. If you allow me, I would like to focus very much on the green aspects. I'm happy to also go into digital and capital markets union if you like, but I'm sure that the commissioner who will speak after this panel will cover these aspects. So on the sustainable finance agenda, which has been and still is very high on the Commission's and the EU's policy agenda, and that has been the case for the last couple of years. The reason being that the sustainable finance agenda defines the contribution of the financial sector to the European Green Deal and to the transformation of our economies towards more sustainability. This is the link to the Green Deal, which is currently very prominent, but I should also say that the Sustainable Finance Agenda has also always been part of our Capital Markets Union agenda of creating more liquid and deeper and more integrated capital markets across the EU, and given that this is part of the internal market, also across the entire EEA. Now, we have put in place a substantial set of rules, and Harald Franke Lund has already referred to some of them. The basis for what we are doing is the taxonomy. The taxonomy defines a common language that allows us to talk about sustainability with regards to different economic activities, and facilitates investments in that. It makes sure that we do not all have to turn into climate scientists when we want to make investment decisions, or when designing projects that can be invested in. So we have set out in different pieces of legislation this language that allows us to speak about climate-related issues and about what is green with regard to our climate objective of climate neutrality. We've done that in what we call a delegated act, a piece of secondary EU legislation in 2020, and we complemented it with a very controversial, as we also already heard, complementary delegated act that covers gas and nuclear energy activities. Now, this language, the definition of a common language is the basis, and on that we've built a disclosures and reporting regime that requires or that introduces more transparency, both in the financials and for non-financials. This we do mostly with the SFRD and the Corporate Social Sustainability Reporting Directive, which is currently in the final stages of the discussion by the legislator. But we're preparing the implementation already, because the trilogue is in the final stages, and then that allows to build instruments on this, and the European Green Bond Standard, and I don't have to go beyond what has already been said, will then allow the practical use of this framework. What we want to do next is we want to concentrate on consolidating and making work what is already there, and make sure that what we've put in place up until now can actually work properly. And what does that mean? That means we are going to look at, for instance, issues of greenwashing, and we already heard about quite a bit about that. This is essential to increase the trust of the markets into green products. We want to look at how our framework can be used for transition finance, which, and again, I don't have to repeat what's been said, is crucial. We want to look at data-related issues, and that is both the question of the availability of data, which my impression is improving rapidly, but there are still important challenges and gaps. But also standards and methodologies, and that that relates in particular to ESG ratings. Now, in all of this, digitalization is an important enabler and facilitator, and we also want to use the full potential of digital technology to facilitate and the use of the sustainable finance framework. And here, for instance, our proposal that we made in the context of the Capital Markets Union on a single access point for company information can play an important role. Maybe I should conclude by saying that this is the sustainable finance agenda is not the only initiative in the area of corporate sustainability. We're also colleagues of mine are also working on and negotiating currently the CSDDD, the corporate social the corporate sustainability and due diligence directive, which is not strictly speaking part of the of our sustainable finance directive, but presents, of course, close links and introduces further disclosure requirements in the area of ESG. Maybe I stop here.
Thank you. So we'll just move directly on to Unnur, who will give us the perspective of the supervisor and the Icelandic perspective.
So now we're ready for the perspective of the supervisor. As for the supervisor, we have to see into why is it that we're speculating on the financial services industry and the connection of sustainability. But that's obviously how important the financial institutions or the financial services is for as catalysts for the greening of the real economy. So where they place their investments and to whom they lend money, both banks and other financial institutions need to scrutinize well the products and operations they are exposed to. And that's how we see services like Cicero that we heard about just earlier come in strong. So in connection to the real economy and the insurance sector, I want to mention that many of the catastrophes that are happening today around the world are not insured or even insurable, and that those most vulnerable to them are the hardest hit. Many economies around the world are very carbon-based, and so the transition into green economy is risky and can cause instability. So I just wanted to mention these as examples of how the financial services and the real economies are intertwined. So we as supervisors, we need to be aware of the classic temptation problem in the financial services sector to use greening only as a marketing issue, providing the public or investors with misleading or false information about the environmental impact of the company's product. This is what we usually call greenwashing, but I wanted to sort of come up with the definition of it. This can be misconduct, but it can also be just plain lack of knowledge. And we also have to be aware that the characteristics of financial services are rapidly changing from the classic bundling or holistic services of banks into smaller companies providing fragments of the services. This means that it's even more complicated than before to monitor in the micro sense what the sector is up to, and the small companies are less likely to have all the expertise needed. I believe that the participation of us as EFTA EEA state in the internal market and its legislation is of paramount importance to us in these EFTA EEA states in regard of regulating sustainability. The climate change knows no borders, and common rules are important in this regard. And I know, for example, from colleagues in Asia, such as Korea, Japan, or Indonesia, that they have used the European legislation as precedences for their own taxonomy. So it seems that Europe has taken the lead in this respect. The time lag between the EU and the EEA is, however, always a problem. When legislation is finally in place in the EEA, we have to swallow large changes, such as this one, in one piece, when our counterparties in the EU do with its steps. It is likely that the Bill of Law implementing the Disclosure and Taxonomy Acts will only be adopted in the Icelandic Parliament next year. And as I understand, it's on the verge of being integrated, these acts into the EEA agreement. So it's not timely as yet. We at the supervision pillar of the Central Bank of Iceland, we will be preparing for these initial steps of our tasks in this regard in our work plan for 2023. This seems to be ticking into all the boxes of regulatory supervisory tasks, adding a lot of work and responsibilities. We will need to develop this as a part of regular risk-based supervision. The enforcement of this legislation is both prudential supervision and conduct supervision. There are many provisions that are granting power to the supervisor to sanction companies that do not comply. So in this respect, there's a great reputational risk for the supervised entities if they don't comply. The scope of the legislation is all the financial sector and the issuers, as we have been hearing about, the issuers of shares and bonds and companies that are listed on a regulated market. So finally, what we need is to have enough resources and expertise to deal with the additional burden of tasks. We will need to train the supervisors of all the relevant sectors and create a coordination platform. So probably we also need sort of to train some legal advice in this respect as well. So that's it for my part for now.
Thank you. It's a complex task at hand.
Yeah.
So next we'll move on to LGC, private banking, and I'm quite looking forward to hearing what you think of the challenges and opportunities for a banker and investor.
Okay. I don't know, do you hear me or? Yes? Okay, so first of all, thank you very much for organizing the conference and for providing us as a private institution, so to say, the opportunity to present a little bit our perspective, so to say, from the business and from the investors' point of view. Maybe just one or two words regarding LGT. LGT is international private banking and asset management group. We manage a little bit less than 300 billion. 1/3 is institutional money, mainly in private equity, private debt, insurance linked or impact investing type of funds. And 2/3, i.e. 200 billion, are classical private banking money we manage for private individuals. And we are roughly 50-50 in Europe, UK, and in Asia in terms of our client base and our activities. Now, the topic of the conference I thought was very interesting, and I can really tell you that for us, the whole topic of sustainability is extremely important. We are extremely committed and convinced of the topic. First of all, because we believe it's a good cause, but also because we really think that it will have fundamental effects on the real economy, on society, and hence on successful companies and less successful, even perhaps stranded companies in the future. So as investors or as advisors to our clients, it's extremely important that we have a clear view, a clear perspective on that. So for us, obviously, our biggest contribution is how to guide our clients in terms of how they invest the money. We are less a lender, a little bit, but primarily Lombard loans, which are again pledged with security. So it's basically the way we invest the money that matters. And here I would like to highlight one or two concrete aspects, which in my view are important. First of all, what can we do? Of course, we can do a lot of research and advice to our clients on how to invest in a sustainable way. So what are good securities, be it bonds, be it equities, green bonds, and to make sure that the flow of money goes in the right direction. In order to do that, we need obviously research. We have roughly 40 dedicated sustainability researchers and investment managers in our group. And obviously we have a proprietary ESG cockpit that looks at all the different securities, provides transparency. We can also look at the different 17 SDGs and tailor portfolios for clients along their SDG preferences. And obviously, probably the most tangible area is the CO2 part. That's probably in general the area where you have the most tangible and concrete measurable information. So we also try to tailor obviously our portfolios and our investment policies so that we can reduce the CO2 emissions as much as possible. This is something a lot of other players do, and you mentioned greenwashing. This is definitely something one has to be very careful, and reputation is the most precious good, so to say. We also have, so I think it's extremely important that you don't fall into any type of trap like this. I would perhaps next to this, which many players do, perhaps highlight one or two other specific items, which in my view are important. One is technology. I think obviously technology is very important because it helps to facilitate financial services, how to bring it to clients in terms of the transparency, etc., reporting, but also a lot of the greening, the transitioning will only be possible thanks to technologies, and these technologies cost a lot of money, and that's where I would say investments and the way to guide money into those new technologies is extremely important. That's where the finance industry has an important role. I think if we look at the Paris Agreement, 2050 is the deadline, so to say. I think the finance industry has to be active before that, because those investments need to occur with a significant lag time in order that those investments can then deploy their real physical and real economy effect. So, for example, for ourselves, we have set an internal goal of net zero by 2030 for the client assets where we have a direct or an indirect influence. It's a big challenge. We will see how far we come, but I think we clearly feel the pressure. 2050 is very far away. I don't know how much real motivation it generates, but I can tell you 2030 definitely generates a lot of management attention, and we invest a lot in this area. The other aspect I would like to mention is, of course, we also have our exclusion policies, and you mentioned this a little bit controversial, newest development with nuclear, for example, and so on. We have our exclusion policies. I think that is a very good thing, but purely with exclusion policies, which is in a way also the easy way out to just say goodbye to the problem, you need also to engage and to enter into an active dialogue with the companies, because 80% of the real companies are probably in between, and you have to engage with them. And I thought, Harald, the example you mentioned where you brought the CFO and the sustainability officers for the first time together, this is something where we as a bank, as an asset owner, can also contribute a lot. And we are also investing in this area. Unfortunately, in my view, there are probably some hurdles when it comes to bringing the voice and the power of the voting rights of individual private clients towards those votes in favor of ESG topics. This is, in my view, due to legislative mistakes, which maybe we could address afterwards, and it would be good to find a way to provide also not only to funds and to institutional money the voice of capital, but also to individual private investors. Then to conclude, I think regulation is extremely important. You said we are the target. I would rather say that in this area, regulation is our biggest helper, because regulation is absolutely necessary. The private economy alone will not make it. Regulation alone will not make it, but together, I'm sure we can make it. And I mean, you are much more qualified than I, but I really see a lot of benefits in terms of the taxonomy, the transparency, in terms of the investor guidance, protection, maybe a little bit investor nudging in certain areas. And perhaps last but not least, I think the whole carbon pricing area is probably also extremely important, because if carbon pricing would include the externalities, then a lot of things would happen automatically through the force of the market mechanisms. And of course, we need regulation, but we all know that the power of pricing ultimately is also not to be neglected. And talking about regulation, I think, as you mentioned, and I can really confirm that we are regulated in Hong Kong, in Singapore by the HKMA, the MAS. We can clearly feel and see that the EU is really a pioneer, thought leader, and ahead of the curve. And a lot of other regulators are looking at the EU and want to adopt what the EU has already done. I think there we are obviously also very glad that through the mechanism of the two-pillar mechanism, and our belonging to the EEA and through the EFTA mechanism, that there is quite a smooth transmission mechanism between what is happening at EU level and with the EEA. So that is for us also very important. And I think regulation and private market go hand in hand. This would be as my short introduction.
Thank you. And we should definitely come back to the interaction between regulation and investment practices. But first, we'll hear from Idar on the industry perspective. And as Olivier just mentioned, also how you view the smoothness of the transition from EU legislation to EEA incorporated and national incorporated legislation. Please.
Thank you very much. It's a pleasure to be here. Important theme, good group of people. First, the context. Fundamentally, finance has to do with understanding and pricing risk in credit policies, in investment decisions, in insurance, understanding and pricing risk. What we have realized gradually is that climate and nature-related risks are also financial risks. So this is important. I mean, it's important. Secondly, through our credit policies and through our investment decisions, we, the financial services industry, we are deciding which technologies that will be financed and which will not, which business models that will be supported and which will not. And through those decisions, we are forming societies. But we do not have democratic mandate to either build or change societies. So we need, especially in important dilemmas, we need regulatory frameworks, we need democratic decisions, we need good policy processes to guide everything we do. So we welcome that. And the third point, as the context is the notion of the twin transitions, the green and the digital transitions. It's very, very important to see that these are two formative processes that really has an impact, probably the groundbreaking impact both on financial services but also on societies in the years ahead, and they are supporting each other. So on this background, I would like to share three key or three reflections with you as a start. One has to do with Marcel and Unnur's points, the activities in EU. We very much welcome the leadership position that the EU has taken through the European Green Deal, through the action plan on financing sustainable growth, through the strategy for financing transition to a sustainable economy, because it gives a clear direction, which is very much appreciated by the capital markets. Unclear direction, very difficult. Clear direction, excellent framework for financial markets to work in. Secondly, the clear direction, the leadership position taken from EU develops a level playing field that enhances competition and enhances innovation, and also the common definitions, the common language prevents what is called greenwashing. But I mean, it helps the good guys that really want to be a part of this, to be able to be competitive. So greenwashing is not only a problem for the consumer or the customer, it's a problem for the serious guys trying to build a business on really doing the right thing. So a common language is important. So we very much appreciate this, but we need to take into account what all the previous speakers have stated, that, I mean, in this transition, we need data, we need metrics, we need everything necessary to make the investment decisions. And in this, it will be very unhelpful if the supervisor see us as a part of the problem. We are a part of the solution, but we need time to get access to data. We need time to really understand the new regulatory framework. And I would very much hope that we can work together to develop this understanding, so to see to that this works well as soon as possible in the markets. My second reflection has to do with what is happening in Norway. I mean, I represent and Finance Norway represent, as you said, 240 banks, insurance companies, and institutional investors. On total, we have around 1.1 trillion euros in total assets. And in the responsible investing framework, we work relatively closely with the Norwegian Sovereign Wealth Fund, which has an additional 1.2 trillion euros under management. So this is an important part, and we understand that what we are doing has an impact. We have worked with this for a long time. In '95, we launched our first green fund together with Scudder in Norway. In 2001, Norwegian institutions were the first life insurance companies in Europe to use SRI principles, social responsible investing principles, for the entire assets under management on the equity side. In 2011, a Norwegian asset manager was awarded the world's most sustainable asset manager by Financial Times, and in 2017 we were the first financial services market to come up with a roadmap for the entire financial services sector, the green competitiveness in the Norwegian financial services sector roadmap, which tries to set up the need for transparency and access to data, decisions based on understanding of climate risk and opportunities, and increased rate of innovation and greening the industrial sectors that we work in. We see the same development as Harald showed as a global trend, and it's very much supported by institutions like CICERO. So we see strong growth in sustainable products and services, and also lately we have seen that green covered bonds is increasing in importance in the Norwegian market. And just one number from 2019 to 2021. Green covered bonds issued by Norwegian issuers increased from 4 billion euros to 12 billion euros. So a threefold in three years. It's an illustration for the importance. My third quick comment has to do with the EEA agreement. Norway is a small, open economy, and some say in the outskirts of the world. So we are very much dependent on the EEA agreement to get market access. And the EEA agreement is a known regulatory framework, so that Norwegian institutions, depending on international capital markets, we can speak to international capital markets based on a framework that is already known. Very, very important. It gives us market access to one of the most important markets on the planet, the European market, and it serves as a single rule book, enhancing competition. So what we need to do is to see to that we have the necessary dialogue to meet the dilemmas and work together, especially in a time of huge transitions where things are changing. But this is a good element in seeing to that we are meeting here today.
Yes, I believe so too. And now to kickstart your discussion, I would like to pick up on, because you all mentioned with slightly different variation the need for a regulatory framework, and given that the role of financial sector in the transition towards net zero is to input into the real economy. I would like to hear more what your thoughts are about the applicability of the new legislative framework, given that this is a slightly different type of legislation than what you normally see in financial services. And it's an opt-in legislation, and it's supposed to be conducive to correct pricing, meaning that you need, as you all touch upon, data. So I don't know if you would like to start, given the fact that you will actually be depending on corporate disclosure and data to feed into your institution to apply the new framework.
Yes, no, I think data is still, I would say, a problem, and I think we would welcome every type of regulation, or if the IFRS board would, have a mechanism where, with the same rigor as we have a framework for financial accounting, there would be a framework for green accounting, basically. That would be more than welcome, because that's really a struggle to find the data, to be sure you are comparing apples with apples. What is scope 1, 2, 3? What is included, not included, definitions, and so on. I think that would be an extreme help, and if there is from the regulatory side a support would be good. I think another area of regulation is not only the transparency, but is also the product classification with Article 8, 9. The whole SFDR is, I think, useful, the way you can also now, you can and you have to ask proactively clients, dear client, are you interested in sustainable investments? And For example, we have now started the implementation of this, and it's interesting. 50% of the clients say, yes, I'm interested in a form of active, explicit, sustainable investment policies that come with certain constraints and so on. But the clients are interested, and I think that's very encouraging and promising, and that helps us. So that would be the way. Of course, it's in the nature of regulation. It is always a lot of paper, a lot of paragraphs, and you have to convince also internally the relationship managers. They have to understand the framework. It requires training, signatures. It's a little bit administrative, but in essence, it's a good thing and necessary. I think it's a little bit the price and the effort we all have to pay for an important and necessary change.
Would like to comment, Idar?
Yes, just to add on to that, I think there are two important questions when it comes to the new regulation. For instance, the taxonomy. The first question is how good is it? I mean, a lot of people have done a fantastic job to do this as good as possible, but the proof of the pudding is in the eating. Now it's being introduced. Now we will see how good it is. And it would be rather surprising if they are 100% successful in all aspects of the new regulation. I would expect that there are needs for changes, amendments, and additions to the regulation. So the second important question is, what kind of process do we have to really quickly understand where we missed, what we did wrong, to fix that, so that in the next 3 to 5 years we will have a regulation that really works well and that really covers what the intention was. So one is how successful is it, and the other is what kind of process do we have to improve what needs to be improved.
Marcel, would you like to comment?
Yeah, maybe I should start with your comment on opt-in. It's true overall. I would also qualify our sustainable finance framework as an opt-in framework, but it's not all opt-in.
No.
So I think we need to distinguish between the part where you have no choice, and that's everything related to transparency. So the disclosures regime, the reporting regime is not voluntary. It's not voluntary. Financials and non-financials have to disclose and increase the transparency, and that is important because that ensures a level playing field, and that ensures the comparability between different firms and between different investments. So that is where you have no choice, and I think we have good reasons for having a mandatory regime in that space. What is then opt-in is all the instruments that build on a more transparent framework. Nobody has to use the green bond standard. Nobody has to follow up on the sustainability advice that retail investors has to be given. They can say, no, I want to do something completely different, or I don't care. You don't have to use the green bond standard. So all of this is voluntary. You don't have to use the taxonomy either. Now, on standards, you mentioned the need. I think we fully agree, and the standards are under construction at European level. EFRAG is creating these standards as we speak, and at global level we have the ISSB that is working on global standards, and the big challenge, of course, will be to ensure the interoperability between what we are doing in our jurisdiction for the EU and the EEA as a whole, and the rest of the world. That will be a challenge, but we are confident that maybe not right from the start, but over time we will be able to come to this maybe not full convergence, but an operability of the standards that we have now. Just 2 sentences about your point, because it's an important point. We have to do with what we, we have to do with what we have, and that's the tedious legislative process that we have in the EU treaty, and the EEA agreement does not make this any easier or any lighter. So we have to be realistic. We are monitoring. We are regularly reviewing. We are intent on and keen to plug any gaps and deal with any inconsistencies and make it work actually. But we have to deal with an institutional framework that is what it is. And that does not apply only to sustainable finance, but also to all areas of EU legislation and EEA legislation.
Yeah. Unnur, maybe you would like to comment on how it feels to have this constant flow into your supervised risk there.
Yes, this has been constant for a long time, and it seems to be it's still increasing. And like you mentioned in your question, this is a new type of responsibilities and legislation. But what is maybe us to compare it with is this sort of the principle of social responsibility that is now being entrusted with the financial services sector. We already have that to a large extent in the anti-money laundering legislation, which is being enforced very forcefully, both internationally and locally, well, everywhere. So sort of in my perception, that's a little bit sort of the next step of social responsibility. And it's such a different era or different philosophy from prior to the financial crisis that we experienced about 15 years ago. Now we are sort of entrusting all this sector with such social responsibilities, and then putting a lot of responsibilities also on the public sector of enforcing that. So that were my thoughts on this question.
Yeah. Oh, so we have a few minutes left before we need to close this panel, and I was wondering if often when we speak to institutions, the question of alignment of the EU legislation with other global initiatives comes up, and also more in general the competitiveness of Europe compared to other parts of the world, and one question in that comes up often is the cost of investing, and whether you would need to have higher return on your investment. So is this something you meet on a daily basis, and because you're globally positioned, that you look into different areas depending on the legislation, or is that just a backdrop that you will have compliance on?
I mean, you mean legislation with respect to sustainability?
Yes.
Or? I don't know. I don't think that is a big subject. I think there is sometimes the myth that if you invest sustainably, you have less investment return. That is sometimes something you have to try to explain that this is not the case, that maybe it's even the contrary. I mean, of course, the last 12, 18 months with what has happened, energy prices, there has been now a little bit an outlier, so to say, but in the long term, I think there is a lot of statistics that shows that there is at least no difference, or even perhaps you have better returns if you invest sustainably. I mean, to me, it's very obvious. If you are a healthy company, you can afford to invest in the transition. If you have already financial problems, you will probably look in the short term and not be able to invest for the long term greening and transitioning. So I think it's self-fulfilling. So I would rather see it this way. Regulation is not a big hurdle. No, I don't think so.
So you would like
just to add on that. If you look at the total compliance burden for financial services institutions as it has developed, it's rather massive. And of course, that burden is high for everybody. And it is important that the regulator looks at the totality, the AML, the compliance for sustainability, the compliance for the digital legislation, the cyber regulation coming. So we should try to see this cross sectors, not only in silos, because the total burden is important, and it's in particular it is important for small and medium-sized companies. So it is important that we are not now regulating in a way that in itself will drive structural change, because it's impossible to be a small bank. It's impossible to be a small insurance company due to the regulatory burden. So proportionality is important in this, and to look across is important in this. So that's one perspective. The other perspective is, of course, that being an EEA member, the time lag from the legislation has been introduced in the EU to it is effectively being introduced with us. Is an issue that we should try to do as short and effective as possible, because it's sort of a double burden. You need to apply the new regulation because international investors are asking you questions about the new regulation being implemented in the EU, but we have to follow the old until the new is implemented. So that's the second part. Having said all this, I do agree that the information that is being produced through the sustainability regulation in the EU will be, in my opinion, a competitive advantage for us going forward, because we sooner understand better key risks that will have an impact on volatility, on cash flows, and should guide our investment decisions.
Would you like a final word before we leave the floor to Commissioner McInnes to bridge?
I think my co-panelists were very good at defending the competitive dimension of sustainable finance. So we would very much agree with the point that opportunities come with our sustainable finance agenda, and Europe is already a world leader in green bonds, and I think that shows is just one example of the potential that an ambitious sustainable finance agenda has for our economies and also for the European financial sector.
Yes, thank you. Now, we've actually managed to end on a very positive note with the opportunity side rather than the challenges. So thank you very much for taking the time. And then we'll wrap this up and leave the floor for Commissioner McInnes with